You're still watching TVC Breakfast. Now, the Federal Competition and Consumer Protection Commission has introduced a new set of regulations that mark a significant milestone in Nigeria's financial technology landscape. Now, these policies reflect a deliberate and forward-looking effort by the government to strengthen regulatory oversight, promote fair competition, and safeguard consumer interests in a rapidly expanding digital lending ecosystem. Under the FCCPC framework, all participants are required to register with and report to the FCCPC, ensuring transparency, consumer protection, and fair market competition. Now, joining us for this conversation is public affairs analyst Ayodele Adio. Good morning, Ayodele. How are you doing?
Good morning. Thank you for having me.
Good, good, good. How's it going this morning? Ready for the conversation? I think this is a very, very important topic, that we get to talk about, because oftentimes we see that when we talk about the lending, a lot of people go through a whole lot with that. And we're seeing that government is now trying to regulate this. But the only thing I want to, start with is how possible do you think this is? And do you think it's not one of those things that we say, oh, we're bringing this on board, but at the end of the day, it doesn't go through? Let's just start with that.
Well, I think it's an important provision by the FCCPC, because what they are trying to do in three stages, basically. One, obviously, like you said in your introduction, is to hound many of these unfair lending practices where you are harassing citizens and customers who have borrowed monies from you over time. But the two are the more important parts, which is one, to ensure that data is being shared with the Credit Bureau of Nigeria. And the third is to open the competitive landscape that has been, before now, dominated by one major service provider that is not even a local, organization. 85% of the revenue coming from lending, airtime lending in Nigeria, accrues to this one, very business. And this money runs into trillions and trillions of naira. And the fact that these monies are usually, leave the country, the shores of this country, and the fact that no local fintech participates in that space is exactly what the FCCPC wants to correct, to ensure that they are local partners, they are local players, and some of the value that is being created from monies made from Nigerians also remain in Nigeria, and more importantly, so that the millions of people who borrow credit, have data with the credit bureau where, banks can make lending decisions to those people at the lower rung of the ladder. And I think that makes absolute sense for me.
Okay.
Yes, but it is encouraging, that something like this is happening. But right now, we already have over 400 of these digital lending companies operating actively in Nigeria. One of the things I really do not like about them is their tactics on getting back their money. They abuse you, they do all sorts of things. How will the FCCPC enforce this? How would you do it? That's number one. Number two, their interest rate is like 40% and above. And somebody lends because when you start with very little insignificant cash, like 5,000 naira, for example, and you have to pay 11,000 naira. That's over 100%.
Yes.
Interest.
Yes.
What are you doing?
Again, you've put your finger on one of the most important buttons here again, because many of these lending companies are underregulated. In fact, mostly non-regulated.
Exactly.
And that's why the first step is to get many of them, in fact, all of them, to register with the FCCPC. And that's what the bill or the regulation mandates. So once they register, you have a fair idea where they operate, what their practices are, and you have the ability to, inflict punitive measures on many of them who fall out of line.
Yeah.
But even more importantly, the regulation says that those interest rates must be declared, right? So the idea that people are dealing with interest rates that are shrouded in a lot of secrecy, because like you said, you borrow conveniently at perhaps 30–40% that is declared on the app. But when it's time to repay, you notice that you're paying at over 100%.
Exactly.
And when those loans extend, there are all sorts of charges that then come along the way that, sort of balloons the entire money to sometimes over 100%. So those interest rates going forward have to be declared publicly, and approved by the FCCPC before you can extend such, loans to the Nigerian people. And I think that way you can cut away the excesses of many of these loan sharks who, under the guise of the pressure that many Nigerians face, just put loans with ridiculous interest rates, and when they fail to pay back at the time allotted, they start to hound you and send unscrupulous messages to friends and families to sort of dent your character. And it's funny that it's been won in court that they do not have the powers to abuse, people who lend monies from them, who borrow monies from them and all of that. But they continue largely because they are under-regulated.
Yes, yes.
Yeah, so talking about, on the flip side, there could be an unintended consequences which could push some of those who are not able to get themselves registered, probably because of the amount of money that is placed on them for them to get registered, might push them into the informal sector where they'll be operating underground, and then people will not, maybe the FCCPC or the government may not necessarily get to note that they are operational, but people who use them will definitely be using them. Do you not feel that this can also be a threat, to the, because by the time you're over-regulating this, let me call it industry, then you probably will be pushing some people underground, and then they'll still continue on the
well, there's a fear that that could happen, but which is why, again, the regulation is even targeting predominantly the telcos, because the telcos actually are the biggest lenders, especially to the people at the lower rung of the ladder, because I think last year alone they did about close to 2.3 trillion to that lower, but of course it was on airtime and data-led.
Yes, in fact, somehow to jettison their
because many of them pay back. But the thing is, without data, take for instance, because the law now is saying that these telcos have to declare that data, that lending data, to the FCCPC. And the reason is simple. Because if people pay back 2,000, 5,000 naira credit over time, they have some sort of a credit history. And then financial companies can then design products that fit those category of people. And then you will not need to be exposed to these kinds of loan sharks who charge ridiculous interest rates and who then, reduce your dignity when they are trying to do their loan recoveries. And so that's why it's important that once this data is declared to the credit bureau, almost immediately you have fintech companies that will have the incentive, because they can now see the data, to create products that will fit that lower rung of the market, and then will discourage people who are playing under the table with all of these sharp practices, and perhaps would have a more sanitized environment.
But I'm happy that you're talking about this. If there's one thing that has been a very big problem, is the way they try to recover their money back. A lot of people have committed suicide because of, having these loan people texting your family member, this person is a thief, this person is a dat. Over a period of time, we've had conversations on this table. Remember when we had Mary Doty and we spoke about this particular issue, but we keep talking about regulation, and it seems like we are just talking, but we never see action. Up till now, do you know that loan companies are still doing what we're saying they should not do? So why do we keep talking and then nothing is being implemented? We will wonder, are we just speaking and not putting effort?
Well, there's an element of that, to be honest with you, because like I said, there's been landmark decisions on many of these practices, but you still see these loan sharks continue to play.
So what's the problem
business
there?
As usual.
Why do they continue?
I think the reason that they continue is because the regulation is amongst a set of different other regulations where bigger players are stopping the implementation of that regulation. And I'll explain. So this lending bill, for instance, that's supposed to take care of these loan sharks, is also part of a regulation that is supposed to rein in big telcos who have huge lobbying power. So the parts that they do not like, that they currently perhaps at this moment are lobbying against, also then affects all the other things down the line, right? So because they have a huge lobbying power to stop you from checkmating their own practices, it then cascades downwards, and makes it difficult for you to implement the other things, because they come as a whole pack. And so that's why, the Federal House of Representatives were debating that sometime last week to stop the implementation of the bill, to reconsider it. And so these are the things that delay, because you see, it's the provision is in plain sight, because the argument that some telcos are making is that it's going to stifle innovation and stuff like that. But the truth is, I've looked at that regulation, and I must say, I've been very critical of the FCCPC in recent times when they went to markets to bring down prices and things like that. But I think on this one, they are pretty much spot on, because the truth is, if this bill passes, it opens the market up for local fintechs to play. The loans, the interest rates that are charged on loans will definitely come down. We would have access to data in the credit bureau, and many other Nigerians can make better decisions on who you're lending to. And all of these, creates an environment where, opportunities, emerge locally.
Okay, the telcos are big, and as you said, their lobbying powers is really strong. However, they are visible. You know, they are visible. We know where they are. I don't have to be in government to know where MTN is. You get what I'm saying?
Yeah.
But these loan sharks, they behave like ghosts.
I mean, they are ghosts.
You all right? You can't put an address to a whole lot of them. And the fact that there are over 400 of them, that's proliferation of that space.
Yes.
It tells me that there's something these guys are taking advantage of that the Nigerian authority has not curbed. Could you point fingers to those things?
Two things is access to capital, right? The man on the street, really, if he walks into a commercial bank, cannot get credit.
Yes.
Right? Because they would ask you for all sorts of collateral and things like that he doesn't have. And so he becomes desperate, and then he gets some sort of an advertorial on his phone that says you can borrow 50,000 naira instantly just by answering these 2-3 questions. And then he doesn't ask so many questions. He gets 50,000 naira, but doesn't realize that he's going to pay 2 times that amount. And so they are trapped. It's a vicious cycle, you know, that people find themselves trapped in. And like you said earlier, that's why many are committing suicide. That's why many are running away from their places of residence and things like that. So that access to capital is a problem. And the reason that there is a lack of access to capital is because there's a lack of data as to how, you know, people in that ladder spend and make money. That's right. And that's why this regulation is important, because once telcos can share that data for lending practices and how people borrow and pay back airtime, you sort of have a fair idea of how these people make money, the kinds of amount they can pay back, the period in which they are able to pay these monies back. And then you will see smaller companies that are better regulated offer these loan services to this class of people. That's right. And then you reduce this, you know, sharp practices that many are seeing everywhere. You know, I think it's access to capital.
While you were talking about this, something was playing in my head. You know, there's a way when you go on Google, you get, you know, all these unsolicited advertisements on your phone. Even some phones are embedded.
Yes.
You know, they are enabled for you to receive advertisements.
True.
So there was this one that came to my head. He said, if you borrow 80,000 naira, we'll give you 100,000. So the way that playing in my head, let's get out of here. So let's speak to, you know, all this lacuna where you said that people are not, they don't have access to, you know, credit, they don't have access to, and I think that's what the administration is also doing, the credit core.
Yes.
But we don't know how far-reaching it will be for the common man.
Yes.
Let's speak to behavioral change. People who are desperate. Yes, you need money. You want this, you want that. So they do not get to read the terms and conditions, which are written in, you know, very tiny print that you won't be able to decipher what's there. Yes. So what precautionary measures should we, I mean, should they take when, you know, borrowing from, whether it's big banks or whether it's just from all these unsolicited apps?
Yeah. I mean, even as educated as you and I, I'm not sure that we're able to even read all the terms and conditions when you get a mortgage or something, right? So they're not going to be able to do that. Let's call a spade what it is. And that's why we need the regulator to be on the side of the Nigerian people, to do the job of hounding those with sharp practices and ensuring that even the bigger ones that are better regulated play fair with the Nigerian people. It's their job to do that. And thankfully, you also have the FCCPC now. Perhaps we need to argue for better empowerment, because sometimes they are overwhelmed. They don't have enough resources to cover the entire country, and there might be a case to expand their reach. But the truth is, the job of the regulator to ensure that those playing in the private sector play by the books, and once they fail to play by the books, that there are punitive measures to rein them in. Otherwise, people will just keep falling for these sharp practices.
But you know, I say something, and maybe it's just a me thing. I feel like you must be a thief too if you see borrow 50,000 naira and in 2 days get 100,000 or get 300,000 naira. You too, you must be a thief. You too, you must be a dubious person. Because some of those things we see, it's obvious that you know that you cannot be that desperate. But Ibrahim, you cannot be that desperate that you are seeing that somebody is telling you, don't give me any information or don't give me the appropriate things you know you're supposed to give, and I'll give you 1 million naira and there's no interest. There are some things that they look so good, but you're not supposed to do it. So as well, we need to speak to our citizens, as well as the government, to do something. They themselves, they need to be smarter, because you can't tell me desperation will push you into something that you cannot bring yourself back out of. But with all these new regulations and all we're talking about, what do you think is the future of digital lending in Nigeria if all these are being put in place?
Well, just to piggyback from your last point, we're the miracle capital of the world, where the every Nigerian believes in miracles. So
not this kind of miracle.
50,000 for 100,000 could just be his own miracle, right?
Funnily, some people will get away with it, but you know, it's just a platform, just a bait.
It's like a puzzle.
So let me give you an example. Ibrahim, you wake up one morning and they tell you that, oh, Ibrahim, there's a brand new G-Wagon. Take the G-Wagon and be paying 50,000 every month. There are some things that you know that it's not even miracle. It's not God, it's the devil.
You're talking about MMM, for instance. We don't want to expand this conversation. We're talking about MMM. Some people fell
But the people that fell for MMM, I'm still wondering that, are you okay? What were you thinking?
Come on. You can't blame.
You can't blame.
Avaricious, self-aggrandizement, and pressure and all that.
So I guess the future of digital lending and digital payments, I want to believe that if this regulation goes through, would be like what was obtainable in India. Because what India did at some point when their payments were dominated by two major app companies, they controlled about 85% of the market share. And what they did, the regulator at the time, was to cap market share at 30%. And that opened completely an entire market. Competition came in. New businesses sprung up, opportunities cut across the entire country, and more value was created. And that's what I believe is likely to happen here, that if you cap market share, you ensure that you create opportunities for local fintechs to play in the space. We're going to create more value locally. We're going to create more opportunities locally. We'll reduce the amount of capital flight out of the country and would accelerate competition locally, and it will be better for the consumer and the common man.
Okay, so we're just hoping that this, gets implemented. That's the most important. Anything quickly?
Yes, we're still talking about legislation on this. From your reckoning, how long will this legislation take? Because Nigerians need this thing to start like yesterday.
Like now.
It's law already, and that's the funny thing. It's already the law. Right?
Whoa.
The problem is its implementation. Like I said earlier, you have big players, particularly in the telco sector, that are lobbying against the implementation of the law, and that's why you see it, sticking to one point. But as long as the FCCPC stand on its ground and has the support of Nigerians, we're likely to see that law pass. But if we fall to the lobbying power of the big telcos, then it's going to be a big problem for us at the end of the day.
That's a banana peel, for the giants. Well, I think we're actually out of time.
All right, thank you so much for joining us. Very fantastic conversation we've had. But if there's anything I'll highlight, please don't look at any deal and feel like it's very watery. Some miracles are not miracles. It's the devil talking to you. But thank you so much, Mr. Dio, for joining us.
Thank you.
Okay.